Welcome to the Trading Lounge, and here we're looking at the Dow Jones on a daily chart. It doesn't have last night's bar on here just yet. We're at 14,000 here, so it's just natural to expect a corrective pattern here. But I just wanted to have a look at the bigger picture here for a moment. So we're pretty much sort of looking like a structure like this, and I mentioned this the other day. So we're kind of in this wave structure here, and in this wave structure here, we'll have 5 waves in that particular move in through here, as such. And as I pointed out the other day, that this would be in this 5-wave structure. This would be up for wave 1 here and back for wave 2. And then this would be wave 3 here, and in wave 3 there would also be 5 waves as well. So we'll be looking at 5 waves in here, and that would be those little 5 waves here in terms of the 1, the 2, the 3, the 4, and the 5 here. So we're actually sort of completing that 3rd wave here. So the 4th wave would normally pull back 38.2% of the length of the 3rd wave in through here. So we could be looking back at on the cash market here at 13,745. That's a possibility there. I did think we would have one more little high just in here on the S&P 500 and the ASX 200 and the FTSE and so forth, but there was headline news coming out in Europe and in the US that were negative, and that really just sort of really capped that off there. So in this move down through here, normally if wave 2 is simple, then wave 4 is likely to be sideways and complex. So we need to sort of consider that, and that's kind of expected as well, because when we're looking at the Dow Jones as well, and the S&P 500, this is all-time sort of highs here from the bear market drop. So it's only natural to expect that there, and we've got our local market close to 5,000, S&P still working across the 1,500. So it's sort of only natural, and we can expect more swings basically within the market there. So with that in mind, this is the S&P 500 here. So yesterday we were expecting a little move up further. So basically we're expecting up for 1 and back for 2 in a way, and up for 3 and back for 4 and up for 5 to finish that situation, and then have our A, B and C correction. But it just really fell out of bed here, as did the ASX 200 as well. So there is a possibility that this particular thing here can be an A wave here, a B wave in 3 waves to here, and a C wave to here in 5 waves. That's got to kind of complete there, and that could be the wave 4 there. So that's one possibility that that would be considering. So just bear that in mind. So we just need a bit more development here to sort of confirm that. It's a little bit of a long shot, but I'll just sort of keep it there for the time being. Otherwise, we need to consider this situation here, which would be basically a larger wave 4 here for the top of wave 3 here, so wave 4 to pull back further, and this move down here needs to develop into 5. Well, it doesn't have to actually. It can still be in 3 waves here. But if it is in 3 waves, then we know it's a corrective move, but kind of expecting it to turn into 5 waves. And if that's the case, then the B wave here will be in 3 waves, an A and a B and a C, and then we'll have another 5 waves down through here in the C wave. So a little bit sort of tricky to trade through, because it's not a trend, it's a correction. And yeah, so that's that there. This is the Dow Jones, and this is the count that I was just mentioning then again as well through there. So pretty much a wave 4 here, and wave 4s are known to be complicated. So I've got it just mentioned then in the S&P 500 as an A and a B and a C. That's only if we're lucky. The correction could actually be like a triangle sideways or a double zigzag. It could get a little bit messy as well, because that's what wave fours do. So this is really the reaction from the 14,000 here, sort of a psychological thing here. Once again, when you're dealing with large numbers, you always need to consider the smaller numbers around them, and in this case, the 13,800 here. This would be like on our local market as well. If we're dealing with 5,000, that means that we need to look at 4,800, and we need to look at Group 1 above the 5,000 as well. Not that we need to do that just yet, but the 5,100, 200, and 300, because that's the resistance supply area for the 5,000. But here, what we need to do here is just pretty much track this situation down here. So we'll have a closer look at this one here, because this will sort of reflect other markets as well through here. I'm just wondering if I've got this. Well, you can see that's the third wave coming down through here, but I still think that may be the whole third wave just here. And the reason for that, this is the Dow Jones on a 5-minute chart here. So we've got this first move down through here, then we've got this sideways correction through here. So we can consider this wave 1 and wave 2 here, and then this is the third wave coming down through here. It would probably be natural to call that the fourth wave there, the third, the fourth, and the fifth wave here. That's fine to do that, but in terms of trading long, then we would want to see support on the top of Group 1 here, the 13,930, and that would help flip that to the upside. Otherwise, this here is all just the third wave through here, so it's expanding down, so it'd be down for 1, back for 2, the whole third wave down to here, and A, B, C here for the fourth, and the fifth down here. So this would be the A wave here, and that's in 5 waves there. So if we get 5 waves there, we get a counter trend, and then we'll get another 5 here. It normally pulls back to the fourth wave of 1 lesser degree. So that's why I say that, and also using the levels, if we do find support on here, then we can have a 5-wave low in place, and we'll go a little bit higher. But yes, we expect 5 waves down here and a 3-wave trend, and back to the upside. It's pretty much the same in Europe, and also the same in Australia as well. This is the move down. The cash market made it to 49.50 yesterday. This market didn't. As I was mentioning yesterday, we had this little structure up here, so I thought there'd be one more little push up to the 49.50, but it didn't get there. But before trading long, it's always good to wait for a retest on the top of Group 1, and it failed. It failed the retest here and started to move down. So it just naturally creates a short position. If the closest largest number up here, if it didn't retest here and you had to go long, then you need to look at the 49.40 there to use that number to go long on. So you just need to work with the closest largest number. Anyway, this move down through here so far it can be counted in 3 waves, an A and a B and a C wave down through to here. It's likely to turn into 5 waves, so we've also got to consider it as wave 1 and wave 2, because that would be a little 5-wave structure down through here. This is also another little 5-wave structure down through to here. So it's likely to this is the 3rd wave through here. So if this was going to be a 4th wave to pull back, he would pull back to the 4th wave of 1 lesser degree. So really, you'd only want to go long if you were sort of back up on the 4900 here at this stage. So it's likely to see another wave down to the 48.50 area through here, and that would give us starting to look into a 5-wave structure to the downside. And if we get the 5-wave structure to the downside, then we'll be looking at a 3-wave counter trend, and then another 5 waves down through to there. We do feel that that there is more downside to come, because when we look at when we look at, this is just a bit of a rough chart here. This is just the Spanish yields, and we can see that we've got this is probably more in line with the European markets and the euro and so forth, but it'll also play out too with the US dollar and so forth. So we can see that we've got a 5-wave structure to the downside, so we can see the yield pushing back up to at least 6 up here. So it's going to take a while to do that. So while that's doing that, then we're going to see the dollar, US dollar correct higher, and obviously that's going to put the S&P and the and stocks to the downside somewhat. But we know that the market is corrective. I won't go into the European bonds at the moment. Let's just might do that with the euro. So let's just have a look at the commodities as they are reasonably stable. We'll show the bond market here. This is through the iShares, the Barclays TLT here. So if we're getting we've got a 5-wave structure heading down through here. So while we're rallying through here on this ABC here for the bonds, then we're going to have the opposite of course, in yields and also stock as well. So that's what we're going through here. So there's still, if this is taking 4 or 5 days through here, so you can see more time here and more time here to be sort of had as well. So the correction, it could be a little bit sort of time consuming, and it does sort of fit in quite nicely, when we consider the old highs on the S&P 500 and the Dow Jones as well, and our local market being so close to 5,000 as well, seeing profit taking from the larger funds coming in from that perspective there. So yes, but the point being is that it is, as far as we can see so far, is because we've got 5 waves down here in the bonds. With this move up through here is corrective, and once complete, we'll move to the downside, and stocks will move further to the upside. So we have done quite well in terms of making money through the trend up in stocks, and it's only natural to give it back in the corrections here. So it's a time to trade less and to be a little bit more thoughtful. So just bear that in mind. So the commodities, as I mentioned, they're reasonably stable, but if I bring up a dollar chart here in this section here, this is the US dollar rallying off the 79 down through here, and it'll rally in line with the bonds and so forth. So it's rallying reasonably quite high here, which brings it into a retest of the 80 here. The supply will be at 79.80. We can get into that in a minute. But this move up through here with more expensive commodities, as commodities are traded in US dollars, then it is going to apply pressure to the commodities. And as I mentioned here before, the 380, the 80 is a profit, the 8 is a profit-taking number. So I'm not sure, once again, if we've got, if that little high is in here in terms of the 1, the 2, the 5 waves up here for the 3, but there'll be 5 waves in this little section here. I haven't looked there, so that may be the top, or we may get one more push up through here. But we have to expect a larger correction, and a wave 4 can pull back to the wave 4 of 1 lesser degree. So we can see weakness in there. And also when we have a look at BHP as well in the US here, without getting too complicated here, we can see that this trend here is a nice strong trend here, so it's likely to be a 3rd wave in 5 waves. So as I've mentioned before, we were considering this an A wave, a B wave, and then a C wave coming in through here. So simple A, B, and C here, which would tie quite nicely into the copper and nickel prices and so forth, and then a move up from that point there. But of course it can fail from this point, but what we'd be looking for here would be a small 5-wave structure to the downside. It should just come down to the wave 4 of 1 lesser degree, or the 38.2 retracement level from here, which brings us down a little bit closer to the 75. So that's what we would likely to see now in these markets. So just bear that in mind as well. So yes, just really navigating a correction there. But this is copper here. I just want to have a look at copper in the UK as well on the LME here on a daily chart here, because the reason for that is because of this particular triangle pattern that's occurring through here. And a little bit like the US dollar as well, we mentioned before, where we've got, three-wave price action up through here, three-wave down this way, three-wave this way, a little bit tight in there. So even though that we've got a little positive count in here, it's still part of a larger, corrective triangle, and the things with triangles, they are continuation patterns. So if something is coming from this direction and you get a triangle, then it will break lower, and that's the same for the upside as well. So if we came from the upside here and we had a triangle here, then it would only break to the upside because they're continuation patterns. So we can see that we're going to be getting resistance through here as well, but I've been positive since we've had support on the 80 because I like to trade what we see, but a breaking of the 800 here, the major 8,000, the major trading level 8 here, then it would put this into a negative bias as well, and of course that would affect the commodity market and affect Australia and so forth. So just need to bear that in mind, and we'll keep an eye on that. But we were positive after this retest came in through here and finding support, or this little three-wave price action here. So we have been positive with it for quite some time, and it has sort of paid off as we've seen the material sector at least firm up somewhat. So so it's all still pretty good there. The oil market, of course, will follow stock. This is the larger pattern through here for oil as well. So I just sort of squashed this up a little bit through here, which is also a triangle as well. And I just wanted to point out here that so we've got this triangle pattern through here, and a triangle pattern is an A, a B, a C, a D and an E in terms of Elliott. It's a five-wave structure. So we could be completed here with wave E here, and we'll be looking for a larger five-wave structure to the upside and a bullish market to the upside. But we're also mindful as well is that this wave E may not be completed, so we need, because we don't have a five-wave structure here yet, we only have three waves to the upside there so far. So it is possible that this is going to be an A and a B wave here and a C wave here to finish that alt there, the alternative E. And if that's the case, then it will fail from right where it is right now, because this move going up through here can be counted in three waves, either one or A or two and B, and up here for three. And we've got that trend line coming through here. That's why it sort of also really pegged it to the 98, while the Brent lifted a bit higher. So at the moment, we'd consider that a wave 3, and wave 4 to come back would be 38.2 retracement level. So somewhere in here, the 95 in here is the main number through here, the main support as well. But this will just follow stock to the downside. So that's what we'd be looking at through here. So stock is going, if it's going through a wave 4, then this will also be going through a wave 4 as well. We'll be looking for this large, as you know, we were looking for a move back up through here, one more wave up through here as well with stock, but it just didn't pan out for us. So this is just happening a little bit earlier, but an A and a B and a C down through to here, and that may be the completion of it. We could probably see it move back up through here, but if stock is going to follow stock, then we'd be looking at this as an A and a B and a C here for wave 4. So we need to be mindful of that, and that will obviously be down through here. So the important numbers here, 96.50 and the 95 through here. The gold market, as mentioned, we're considering this this as being a corrective rally on sitting on the medium level here, 1650. But I'm not so convinced about that just yet either. So I would turn bearish if the 1650 become the retested resistance. Then that for me is using the trading levels and trading on the right side of price. But while it's sitting above the 1650, it has support there. This little point here, this little three-wave price action through here is in three waves. So that really dictates a new high being put in place here as well. So as you can see, there's two things here. First of all, the 1650, which is the medium level. So it's above that. So I just normally like to stay positive above that. Yes, I know that we've got a three-wave price action here. This can be countered in both ways here, so I'm not convinced about this. So just give it a bit more time to see how it sits on top of this subgroup 2 level here, the 65, 72 and the 80, because if this moves up here and starts to really find good support on here and starts to move up from there, well then that's just another layer of positive news to the upside. But we can expect this to be, you know, a hedge for stock as it corrects as well. So we do really need to consider this a corrective rally, even though that will make a new high through here. So there's nothing cooking here just yet in terms of trade. In fact, you know, we're in corrective patterns right across the market, so you need to trade less in terms of smaller position sizes, and also trade shorter trading ranges as well. So trade to the next closest largest number and exit, so to speak. So alrighty, let's have a look at FX. Okay, looking at the US dollar here, we can see that it's quite strong moving up through here. And the supply levels start here at 79.60 through this subgroup 2 here, but more so up through here. I feel this is going to get stronger through here, the US dollar, because of those Spanish yields that I've mentioned here. So this is because we've got 5 waves here, we're going to be seeing more of a stronger move back through up into this area, which is, you know, going to be in line with the US dollar, and it's also going to make the euro weaker as well. So when we look at the euro here, the move that's come down from the last high here, we have to expect that to come down in 3 waves as well. So we may see that come back further here. It's only really a problem really if it takes out this high of this wave 1 here. Yeah, so it's the same as stock at the moment. We see that we can see that most markets have correlation. So if we're looking at the euro, the CAD, oil, the Kiwi dollar, the S&P 500, they're all correlated, where these guys here are not correlated. These guys have been weaker, but probably will continue to be weaker, as we can see with the pound here as well, still moving down in its 5-wave structure down. So there'll be quite a nice short here once this wave 5 comes in through here and we get a 3-wave rally here. So if you're a currency trader, you can look to short the pound a little bit later on as we get that rally come back up through here. It'll be a 5-3-5 structure. So yeah, so just keep an eye on that. But the 135 here, we need to count 5 waves down through here as well, just like we did on the pound just then, and that's what we'll be looking for there. And you can see that coming to play the same as the pound there. So you can see the strong wave in the middle here, so that would be the 3rd wave there, the 4th and the 5th here. So we're going to see support around the 135 here. So the short trade would be when this does find its low here and we get some sort of 3-wave counter trend back up, maybe into this area here to give it a head and shoulders or whatever, and then back down again. So that would be the short there. So just a little bit of patience here, and that should set up quite nicely here. Just be careful of shallow retracement levels within here. I can see that this is shallow here. This is quite shallow in here. So this larger ABC here would also be shallow as well. So we'll track the 5-3-5 structure through here and then move it to the downside there. The Australian dollar's no real change in the Australian dollar. In that we're still looking for this wave 5 here, this wave 1 low through here, and there's a couple of ways to sort of count it, such as I mentioned before, the wave 4 here in terms of an A, B, C here for the B wave, and a C wave to come back up through here. You would only trade long if you got support on top of the 104.30 there. Remember that that this is not correlating with the S&P 500 at the moment, so it could move up, but you'd want to have good retested support on the 104.30, and it's not there yet because you can see that the move up through here to come back down through there. It hasn't found that a support, has it? It failed. It's failed at this one here, and it may fail here again. If it gets into a situation where the 104.20 becomes the retested resistance, then you can start to look into scale short in through here with very small positions, with a view of adding under the 104 here as such. But there is a little bit, as we've had this up here for a little bit, there's still potential for that to spike up here before it fails further to the downside. But as you can see here, it's Group 1. We don't normally trade in Group 1, so probably better off with the euro and the pound, because we know those Spanish bonds, the yields are going to be have got further to push to the upside. Alrighty, well that's it. So in a bit of a nutshell and just sort of recapping, we are now in a corrective pattern, A, B and C in most markets, and that would be a 5-3-5 structure. We believe it to be corrective in nature, so once it's complete we'll see further upside. It's just that it could take all of this week and part of next week to mature before we see any sort of upside there. So I do suggest trading less amounts of capital, because we'll be in the robo situation, because we'll be in those swings there. Sure, there'll be times where it really hops along and other times where it's sort of stagnated, but they're all basically we're in in a swinging market, so you just need to be a bit more diligent in the way that you handle things, because as you know, it's the corrections that take your money and the trends that give it to you. So you need to just rein yourself in. Alrighty, well, good morning and good luck.